Here are some tips for you to view the video. Number 1, always take notes over the video. That way you can pull it up later as a resource. Number 2, make sure you download the practice problem and answer key found in the description. And number 3, when you're practicing your problems, make sure you always put a time on it. This will allow you to get used to the pressure that will be helpful on test day. Hello and welcome to my channel. Today's lesson, we are going to talk about the District Test 2024 Group 1 problem. You can see here on the whiteboard, this is where it's listed. Make sure you take notes and make sure you label what group number and test this is coming from, so this can help you for later when you study. So what we have done here is we have drawn a T. Here's a T. And we have labeled the T the left side and the right side. Then underneath it, we have put the accounting rule, debits equal credits. And then underneath the debits equal credits, we have put the accounting equation, assets equals liabilities plus owner's equity. Make sure you draw your T straight through the equal sign so that way you can clearly see the left side and the right side. So let's talk about the left side first, which is the debit side. We're going to talk about assets. Now, what are assets? Assets are anything you own of value. So in a business, the assets you may have are listed here. And this is the assets she usually puts on the district test. So I'm only sticking with those. So we have cash, we have petty cash, we have accounts receivable, which these are the customer accounts that owe us money. Then we have merchandise inventory. This is the inventory that we purchase to sell in our merchandising business. And then we have supplies. These are the things we use in our business to keep it up and running. And then we have prepaid insurance. Next, on the right-hand side, we have liabilities. Liabilities are anything we owe. So a typical liability is accounts payable. These are the vendors that we buy from that we end up owing them money. Then you have sales tax payable, which is usually the sales tax that we charge customers. Then you have Social Security tax payable and Medicare tax payable that usually have to do with payroll. If you see any account that has the word payable in it, then it's going to be a liability. And then we have owner's equity. So if you look at the accounting equation, if you take your assets, anything you own, and you subtract out the liabilities, anything we owe, you're left with owner's equity. Before we get into that, we're going to talk about normal balances. So the whole point of group 1 is she will have listing accounts, and then you have to put if their normal balance is a debit or a credit. So what does normal balance mean? Normal balance means it's increasing. So anytime you want these accounts to increase, to go up, increase in value, then you're going to either debit them or credit them, depending on if their normal balance is a debit or credit. So looking at the assets normal balance is a debit. So anytime you want to increase any of these assets, put money into them, show there's money being put into them, then you're going to debit them. If you want to decrease them, then you do the opposite. You would credit them. Now, look at our liabilities. If we want to increase liabilities, their normal balance would be a credit. And then if we want to decrease the liabilities, then we would debit them. Now, let's talk about owner's equity. So, the accounts that increase owner's equity. Let's start with capital. So anytime an owner wants to put money, personal money or investments or anything into the business, they're investing in the business, that is called capital, and it increases owner's equity. Then we have sales. Sales obviously increases owner's equity. Now, before we talk about the other two accounts listed, let's go over and look at things that decrease owner's equity. So I've moved them over here to the debit side because their normal balance will be debits because they're decreasing owner's equity. So Sales returns and sales discounts. Basically, if we have a customer that we sell to and they return some of the merchandise, that's obviously going to have our sell amount that we made go down, so it decreases owner's equity. Sales discounts, that's if we actually give a customer, say, a discount for paying us early, then that's going to decrease owner's equity. Purchases, anytime we purchase inventory, that's going to decrease owner's equity. Now let's move back over to the credit side. So purchase returns and purchase discounts, they're similar to sales. So purchase returns, if we purchase from a vendor and we return something, that's going to increase owner's equity. And then if we get a discount from the vendor, say because we paid them early, then that's going to increase owner's equity. What helps me is if I know purchases is a debit and purchase returns and purchase discounts go against that, they're going to lower the amount, then they have to be one has to be a debit and then one has to be a credit to offset that. Then we have transportation in. This goes along with purchases because it's usually like the freight or the shipping that we pay for the cost of merchandise to be delivered. So that obviously is going to decrease owner's equity. So it's going to be, normal balance is going to be a debit. And then lastly, we have expenses. This example would be like your advertising expense, miscellaneous expense, utility expense, any type of bills that we use to pay in our business. Those will also decrease owner's equity. So hopefully this has been helpful to teach you these accounts. My advice is to just find a way to remember, but the best way to remember is the left side is the debit side and the right side is the credit side. I hope you enjoyed today's lesson. Thank you. Since I just explained the normal balances to accounts, whether they be a debit or a credit, let's go over the 2024 District Test Group 1. Again, you can find this practice group in the description along with the answer key. So looking at the directions, this is for questions 1 through 6, indicate whether the change in the account would be recorded as a debit or a credit. Now, let me remind you, normal balance, if it's a debit or credit, depends on if it's increasing or not. That's its normal balance. So looking at question number 1, a decrease in accounts receivable. Well, you got to know that accounts receivable is an asset. It's listed on the debit side, the asset side. So increasing accounts receivable would be a debit. But it says clearly in the test, decrease. So then you do the opposite of its normal balance, which would be a credit. Look at number 2, decrease in accounts payable. We'll go find accounts payable. You need to know is a liability, which is its normal balance is a credit, but it's doing opposite. So decreasing it, so then it would be a debit. Increase in sales discount. We'll go find sales discounts. If you look, sales discounts is on the left side, the debit side, and its normal balance is a debit, which means increasing. So sales discounts would be a debit. Increase in purchases. Again, look at your notes. Purchases is on the debit side. So, and it's increasing, so it would be a debit. Increase in the capital account. Well, you can look and see that capital increases owner's equity, so it's on the credit side. So it would be a credit. And then the last one, transportation in, if you look, it's on the debit side. So, and it's an increase, so that means it's a debit. So hopefully this has helped you. What I would do is, if you go to, I'm going to put a link in the thing, and if you go to this other link, you're going to see archived exams. And there are exams from 2023, like all the way to 1997. And you just click on them, and then you can pull up, there's invitation A, B, district, regionals, and state. This one in particular, you want to just focus on district for right now or any invitationals. But when you open up a test, you'll be able to see that usually the first group has to do with debits or credits. So they basically want you to write down if their normal balance is a debit or a credit. Anytime you do these practice tests, I would put a time limit on it. I would get to the point where I was doing this in like 30 seconds. Remember, there's at least 80 questions on the test and you get 1 hour. So the faster you are in handling the pressure of timing, time everything you practice on, and it'll make you better. All right, thanks again. Please make sure you hit like, subscribe. Any comments, put them in. If there's other things you need me to do, different ways you want me to teach it,